Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings to see if they're raising the roof or just being a roof today. We're looking at Nuvve Holding Corp, which seems to have made some interesting moves with its funding. Let's dive right into what Nuvve Holding Corp has been up to. Something that could be a game changer for their future operations. So, it looks like Nuvve Holding Corp had a previous deal back in October of 2024 with some investors to buy convertible promissory notes and warrants. Think of these notes as loans that can be turned into company stock, and warrants as options to buy that stock later. Now, some of these investors got a chance to put in more money because of something called an additional investment right. And on the 17th of December 2025, the company did just that. They issued another note, this one for over $111,000 and accompanying warrants. This is tied to what they're calling the heir issuance. This new note, the additional note, can be converted into shares of the company's common stock. And the warrants, well, they give the investor the right to buy shares of this common stock. The price for this is set at $3.88 per share. What is interesting is how they figured out this price. It is 95% of the average of the 5 lowest stock prices from the 10 trading days before the investor decided to exercise their extra investment. Right, this is a common tactic to make sure investors get a good deal when they're putting more money in. Next up, let's talk about the repayment terms for this new note. This additional note has a term or a lifespan of 18 months from when it was issued. But here is where it gets a bit flexible. The company can actually extend this term by another 6 months. However, they can only do this if at least 33% of the money from the note has already been paid back or turned into stock, and if there haven't been any problems like the company failing to meet its obligations. If they do extend it, they have to pay the investor 6 months of extra monthly interest up front based on how much is still owed. Now, about converting this note into stock, there are some key details. The investors can choose to convert this note into common stock at any time. The number of shares they get will be based on the principal amount of the note left plus any interest that hasn't been paid yet. The conversion price is also $3.88 per share. This price has something called full ratchet anti-dilution protection. Basically, if the company sells stock for less than this conversion price in the future, the conversion price for this note will automatically adjust downwards to match that new lower price. Protecting the investor, there are also standard adjustments for things like stock splits or dividends. But it gets more complicated if things go wrong. If something goes wrong or an event of default happens, the conversion price can change to an alternate conversion price. This alternate price is a bit of a mouthful. It is the lowest of several options. The current conversion price, or a price that is 80% of the stock's trading value on certain days, but it cannot go below $0.528, which is called the floor price. This is a safeguard for the investors, ensuring they don't get a really bad deal if the company's stock price plummets due to trouble. Let's look at the interest on this note. The additional note will earn interest at a rate of 8.0% per year, but if an event of default occurs, that interest rate jumps up to a hefty 18.0% per year. The principal and interest are paid in equal monthly installments. These payments start on the 28th of February 2026, or when a registration statement is filed, whichever comes first. Normally, these payments are in cash. However, the company has the option to pay some or all of it with shares of its common stock, as long as certain equity conditions are met. The price at which they issue these shares will be based on the conversion price or the floor price, whichever is higher, and 90% of the average stock prices from the last 10 trading days. And there is a limit on how much they can convert to. The company has put a cap on this. The investor cannot convert the note or receive shares if they, along with their affiliates, would end up owning more than 9.99% of all the company's outstanding common stock. This is to prevent any single investor from gaining too much control. Now, what happens if the company doesn't meet its end of the bargain? If an event of default happens, the investors have the right to demand that the company buy back all or part of the note, including any unpaid interest, in cash. This is pretty standard in these kinds of agreements to protect the lenders. Moving on to the warrants that came with this deal. These additional warrants are ready to be used right away. They'll expire 5 years after they were issued. Importantly, they can be exercised on a cashless basis. This means the investor might not need to pay cash to exercise them, especially if there is a major change in the company, like a merger, or if the shares they want to buy can't be easily resolved because of registration issues. The exercise price. The price the investor pays to buy the stock using the warrant is also subject to adjustments, similar to the conversion price, to protect against dilution. Let's talk about the numbers from this deal. The company got gross proceeds of $100,000 from this air issuance. That is before any costs. They plan to use this money for working capital and general business purposes. It's not a massive amount, but for a company like Nuvve Holding Corp, it can certainly help keep operations running smoothly. They also have to file a registration statement within 15 days to register the shares that can be issued from these new notes and warrants. This deal was made under specific rules. The securities were sold without being registered with the SEC, relying on an exemption under Section 4, R2 of the Securities Act and Rule 506B of Regulation D. This means they were only offered to what the law calls accredited investors, and they didn't use any general advertising. The investors had to have access to all the information they wanted about the company. This report is just to inform, not to sell. The company is making it clear that this report doesn't mean they are trying to sell these securities. It's all about providing information. And now, for the exhibits, the actual legal documents. Exhibit 4.1 is the actual form of the additional convertible note that was issued on the 17th of December 2025. And Exhibit 4.2 is the form of the additional warrant issued on the same date. These are the official documents detailing the terms we've discussed. Let's put on our analyst hats and see what this all means. Nuvve Holding Corp appears to be actively managing its funding needs. This latest issuance, while not a massive sum in absolute dollars, provides some much needed capital. The terms of the convertible notes and warrants show a company that is trying to be flexible with its debt and equity. The interest rates and conversion prices, especially with the anti-dilution protection, suggest that investors are expecting some volatility and potential upside. However, there are some significant risks here. The conversion price of $3.88, while tied to market prices, is still a substantial amount compared to potentially lower stock prices that trigger the alternate conversion price and the floor price of $0.528. This could lead to significant dilution for existing shareholders. If the stock price falters, as more shares will be issued to convert these notes and exercise these warrants. The increasing interest rate upon default is a major red flag, indicating the company's financial health is a concern for investors. The strategy here seems to be securing funds for operations with the understanding that repayment or conversion into equity will occur relatively quickly. The company's ability to manage its cash flow and achieve profitability will be paramount. If they can't generate enough revenue or secure further funding, they might find themselves in a situation where a large number of shares are issued at a discount, significantly diluting current shareholders. Overall, Nuvve Holding Corp is navigating a challenging financial landscape. This deal highlights their need for capital, but also introduces potential dilution risks for existing investors. It is a tightrope walk between securing funds and maintaining shareholder value. The coming months will be crucial to see if they can effectively deploy this capital and improve their financial standing. Alright, that is our breakdown of Nuvve Holding Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.